Welcome back. Let's get into some market news now. And Asian markets mostly fell off on Friday, with investors trading carefully as global slowdown worries returned now to the fore, with analysts now pointing to an economic divergence between the United States and the rest of the world. Traders have been cheered by what is a string of better-than-expected earnings from corporate titans this reporting season, the likes of Facebook, Microsoft, and even Amazon, adding to the positive mood on Wall Street. But these were unable to fuel a broad gain. In Japan, the Nikkei slipped 0.2%. The Hang Seng, however, managed to gain a similar mark there, with China as well. The Shanghai Composite, as you can tell, sitting just above that 3,000-point mark by close of trade. Let's head on over to the United States now, where the S&P 500 ended Thursday's session slightly lower as a dive in industrial stocks and concerns about slowing global growth overshadowed gains in Facebook and Microsoft. The Dow Jones Industrial was 0.5% to the good at 26,461. The S&P 500 marginally lower, just below that 3,000-point mark, and the tech-heavy NASDAQ managed to add 0.2%. That's to 8,118. As I said, the corporate earnings out of the United States have certainly bolstered the economic sphere and certainly sent out a message that perhaps things aren't necessarily as bad as one would have thought, but it hasn't meant broad gains across the rest of the world. Look at that. The FTSE 100 still following through from yesterday's losses and now headed into another day of red. The DAX and the CAC 40, however, seeing some marginal gains on that front and certainly are able to gain somewhat, moving into some black territory there. Continuing with that outlook as well, here locally, of course, the oil share itself has been on a 6-week winning streak. So for 6 weeks in a row, the JSE has been on the up. It was 0.7% down for the week earlier this morning, but it has to go into the red by at least 1% to, of course, do away with that downturn for the week. Otherwise, it does break that winning streak, and thus far, it does look to be going into negative territory for the week. The industrials are managing to head higher, however, with the financials, however, struggling a bit there. The banking stocks not doing as well as one would have hoped. Taking a look at the commodity stocks as well, resources headed lower today with that gold and platinum shares as well, not in the greatest of nicks, unfortunately. The commodities picture itself has been one to look out for, particularly with that oil price, which is now slipping. It does seem that OPEC is willing to get on board here and perhaps fill in that gap that Iran will leave come the 2nd of May due to sanctions from the United States. That sentiment is bound to take away $10 billion from Iran alone, which is exactly what has happened in the last year, ever since Donald Trump did announce his intentions to bring on board those sanctions. The likes of platinum and gold, however, are managing to head a little bit higher, although not necessarily shooting the lights out. When it comes to the currency picture, South Africa's currency weakened to around 14 Rand 50 against the US dollar yesterday. It has come back ever so slightly, but today, however, is still weaker from its close of around 14.35. It's now 14.41 against that US dollar. It's 18.59 for a British pound and 16 Rand 4 cents for a euro on that front there. So things are certainly happening out in the United States, but what has been key, however, has been the situation out in the United States. As I noted a little bit earlier with regards to those corporate earnings, the likes of Facebook have released their earnings, and I thought it would be quite significant to point out just a quick timeline of how things have fared. The company now has a close to $5 billion fine that they will pay to the FTC. That will be quite significant for them. It will become a record-breaking fine paid to the FTC. But here's the story. Facebook made cash generation of $5 billion in this quarter alone. So they can pretty much pay that off with just a quarter's cash generation. This does move their total cash generation to $45 billion. And here's the story then. Remember March 2018, where we had the Cambridge Analytica scandal? That was a data breach that Facebook had suffered, unfortunately. And the situation there meant that around $70 billion of Facebook's share price was wiped out. That market value going down in less than a month by that price. And that is the drop you see right over there. Even Mark Zuckerberg Zuckerberg's net wealth had definitely gone down by quite a substantial amount in that time. But it did seem that things were perhaps headed onto a more positive trajectory from that point. But as you can tell, by July 2018, Facebook had decided then to focus a little bit more on privacy. And making that announcement meant that they would do away with bots and ways of finding advertising in different ways. That means that a few advertisers as well had left Facebook, and that made a huge fall there for the price then of Facebook, falling at least around 15% as well with regards to that share price. Things have then gone steadily downward till December the 18th, when they found out the amount that they needed to pay, or that the District of Columbia would indeed, the Attorney General in the District of Columbia would indeed be issuing down a fine of at least a minimum of 3 billion rand. That number itself could go up to 5 billion, as attested to by Facebook and their earnings on that front too. And of course, then you saw out in New Zealand, unfortunately, earlier this year, we saw the mass killings in a mosque in New Zealand, and that situation was put live in terms of a broadcast out on Facebook, and a lot of questions being asked as to why Facebook could not have halted or stopped that video from showing live on Facebook. That share price going down ever so slightly. But as you can tell, from the time when the District of Columbia's Attorney General decided that that fine would be instituted, things have generally been going higher. If you take away this scenario and just take a look at how big those losses have been across the board, look at that. Facebook's losses in the month of July alone matched up to the highest ever with regards to companies, sitting there at 119 million, rather, should we say, as that board shows. 119 billion US dollars lost alone by Facebook. A lot of that due to the Cambridge Analytica scandal. Intel, Microsoft, all have felt the purge as well at different times of their lifespan. A lot of that due to the dot-com craze as well in the early 2000s. That is, of course, the situation with regards to Facebook. The market itself has, however, brushed aside things. And after those earnings have come out, they're now sitting at $40 billion more than before that Cambridge Analytica scandal. So perhaps brushing aside any sort of situation and issues. And what it does say as well, that yes, they've got 2.38 billion users on Facebook alone, but clearly investors and market commentators as well, not really too worried with regards to privacy. Let's unpack the picture now just a little bit more when it comes to South Africa's currency, which, as I said a little bit earlier, is slightly weaker, is hurting at present. And we've got Warwick Lucas now from Galileo Capital unpacking that market picture for us. Warwick, appreciate the time. It has been an interesting one. We'll touch on the Facebook earnings in just a moment, but I wanted to perhaps pick up on Japan just a little bit more if we start out in the Far East. Their industrial numbers coming out today, not giving the greatest picture out of that nation as well then, and it does bear sentiment that global growth is indeed weakening.
Well, it does form a somewhat gloomy picture, although projections for the following 2 months do look a little bit better out of Japan. So I think we can look at this as a straw rather than a trend at this stage.
Yeah.
But yeah,
so no contraction in that economy, you feel?
Not yet, but look, it's a big economy, but not a big grower either. So
yeah. We'll certainly see how things fare on that front then. Okay, so we touch on the Facebook scenario itself. Then it is obviously a big situation. Yes, we had Microsoft come out with earnings. Yes, we had Amazon. But nothing surpasses Facebook, really, when you take a look at that story. They announced that they would put away 3 to 5 billion US dollars for that fine to the FTC. But that share price still climbed 6%.
Yeah, big surprise there was the growth in revenue per user and the actual total monthly users did surprise on the upside there. So clearly that business in some rollicking good health there. And then just, in terms of looking at that fine, so we're talking about $3 to $5 billion there. Now this is a business with an annual EBITDA or basic core earnings of around about $30 billion now. It has cash on hand of $40 billion. This is no longer a unicorn that needs to keep on tapping shareholders for funds. It's a real business with real earnings power.
Yeah.
And it can frankly shrug off a problem like that. So I think its core issues now are in terms of privacy is how much is that going to act as a handbrake on its business in future. And that certainly is going to be an ongoing problem. Things like hate speech, managing in multiple languages and multiple jurisdictions. These are the kind of operating challenges facing Facebook going forward.
Mark Zuckerberg has, however, said that he doesn't mind oversight from government with regards to social media, and that if government were to intervene in any particular way, he wouldn't mind that so much. He also has said that the future is actually in private messaging, alluding to the likes of WhatsApp being quite significant to his business and core business moving forward. And he then also went on to say that he's hoping then that he'll be able to find a bank solution that is WhatsApp-based, a payment solution that is WhatsApp-based. All of those things should bode well for Facebook then.
Very much so. I mean, it's got the building blocks for many swathes of business that can make Facebook highly scalable, and that's really why it's remains quite a well-rated share. I mean, its earnings have caught up to its rating to some degree, but I think a lot of potential for ongoing earnings growth there, and that's why I think in consensus in the US, you're probably looking at round about 38 out of 42 analysts saying it's a buy.
Yeah.
So
too big to fail?
We hope not.
We certainly do hope not. Okay, let's quickly touch on the oil price then as well. Coming down ever so slightly, the likes of OPEC saying that they'll perhaps come on board and give out a little bit, to make up for the losses from Iran. Also, you had US stockpiles reaching record highs this week as well. Is that really the sentiment then from the market? Was this purposefully done, one might ask, to say, yeah, we'll take on Iran's mantle. We can just give them a little bit of a sanction there.
Well, despite the apparent club nature of OPEC, charity really does begin at home there as well.
Yeah.
So you saw the comments coming out were somewhat reluctant along the lines of, oh gee, shucks, must we? Look, I mean, in terms of who will actually comply with sanctions on Iran, I mean, your two big users are India and China, which in that part of the world can pretty much sit anywhere they want to. China, though, for its part, will probably cut on the basis that, well, it's got unresolved trade issues with the US. It doesn't need any spoilers coming into the pot. So they may concede to some degree. So, I mean, we're obviously going to see some pressure in terms of that Iran production coming off the market.
Okay. Locally, we had a really sustained rally, and we thought to ourselves, 60,000 points is certainly on the cards. And unfortunately, this week, things didn't go the way we would have hoped. 6 weeks of gains. This week is not looking so good. What is actually driving our markets down? Has it run too hard?
Okay, so I think part of it's rebounds of a load shedding low.
Yeah.
So there's a natural sort of boom bust there. I guess, looking ahead to elections now, I mean, in terms of the rand itself, I mean, that's been weak in the last couple of weeks as well. Yeah. And it's a typical phenomenon ahead of elections. You know, typically we find that the rand tends to be fairly firm from about 3 months ahead of elections. Sure. And the last month it tends to sort of fizzle out and play a watch and wait game. And that's what kind of scenario we're seeing now.
Warwick, appreciate the time, bud. Have a good weekend as well for yourself, and we'll hopefully chat again next week.